Time now for the Word on Wall Street. Top investors watching your money. Joining me now, Hedien & Walsh Asset Management President and Chief Investment Officer Kevin Mon. Also with me is Mark Tepper. All right, Kevin, I'm going to start with you taking a look at futures this morning. We actually have an interesting story here. Oil prices are lower, but the markets, the pre-market, were higher. Dow up 77, S&P up 21, NASDAQ is 140. And look, oil, we're still above $100 a barrel, certainly 113 on Brent and 104 on WTI. But President Trump's Project Freedom is ramping up. And the senior officials are telling Fox that major combat operations are closer to unfolding after Iran fired on American vessels in the Strait. And they targeted the UAE with drones, and there was some oil facilities hit the UAE. U.S. forces responding. They sunk 6 Iranian small boats yesterday. President Trump is warning that force is going to be used if shipping is threatened, Kevin. So, and General Jack Keane was with us last hour. He said, look, the ceasefire's over, and the president's going to have to resume strikes. Your thoughts?
There's an old adage on Wall Street, and that's to sell in May and go away. I think this year, Cheryl, that adage is going to be to stay in May and let AI lead the way. Now, there's going to be more short-term bouts of volatility ahead for certain. And ultimately, this Iran conflict will end and oil prices will start to come down. But let's focus on some other positive attributes. We're on track for the 6th consecutive quarter of double-digit year-over-year earnings growth. We continue to hear from technology companies that they spend billions of dollars to build out AI infrastructure. And we also just had the second best April on record, second to only April of 2020 after the initial onset of COVID. So there's a lot of setting up right here for more growth ahead, but you have to lean into the areas where all the money is being spent and ride out these short-term bouts of volatility.
And Mark, there's going to be growth in the U.S. energy sector, and there is going to be more drilling, and there is going to be more production, refining in this country. It's the U.S. energy story President Trump talked about
without a doubt
10 years ago, by the way.
And to Kevin's point, I mean, earnings growth coming into this season was, I think, expected to be 14%. Now it's expected to be almost 28%, which is absolutely insane. Yes, the energy sector. Look, I mean, it's been the best performing sector year to date. It kind of took the last month off. It didn't do much of anything. But given the fact that we have, low-cost producers like Diamondback Energy right here in Texas, who want to immediately ramp up production to meet demand, I think that is a huge benefit to our own energy companies right here because we have the ability to produce this oil and export it to all the countries that are being deprived of oil because of Iran's actions.
You know who's buying oil from the United States right now? Let's see, Australia, Asia, the Europeans. Oh, by the way, we're already importing tankers full of thick, heavy crude coming in from Venezuela. That's being refined by Chevron at all of their refineries, in particular Mississippi. Just pointing that out, everybody, as you wring your hands about what's happening with Iran. There's Diamondback, by the way. There you go, Mark. It's 213 and change. Mark, let's talk about Spirit Airlines, because this collapse likely is going to mean higher fares for travelers. The ultra low-cost carrier long acting as a price floor, and it forced a lot of the bigger players to keep tickets cheaper. That competition's gone. Industry watchers are expecting prices to move somewhat higher. And we've already seen it climb this year because of the jet fuel issue. And that higher fuel cost is getting passed on to consumers. I want to get your take on all of this.
The competition's gone. That's funny because Elizabeth Warren a few years ago wanted to block the deal with JetBlue because she thought that was going to reduce competition. Right? So now they are gone. JetBlue's having issues. So, I mean, honestly, my biggest concern is who's going to compete for those rowdy passengers. They are known for having like the rowdiest, most reckless passengers on any airline. But, I mean, if you think about it, there was never a competition issue when Spirit was, still operating with JetBlue, with Frontier, with Southwest, American, Delta, United. Passengers have options. They have options, and they're going to buy tickets from those people or those companies that they feel are going to treat them in the best manner possible. For me, I like some good customer service. Spirit passengers maybe just wanted the lowest cost provider and they didn't care about customer service because I had to fly Spirit one time on a red eye to get back from Vegas, and it was not fun.
You know what? No, Spirit had a lot of problems. This was a long time coming. But just to reiterate the point that under the Biden administration, they killed the JetBlue merger. And if they had not done that, those planes, those jobs, 17,000 of them, would have been around today, and places like Atlantic City, New Jersey wouldn't be losing an airline, which is the only one, if I'm not mistaken, that they had. So all these regional airports is something that the Treasury Secretary, pointed out, the loss of that competition in these smaller airports. These are small communities that needed that service. They don't have it anymore. By the way, Treasury Secretary Bessent was with Maria on Sunday, and she asked him about the economy. It kind of folds into our conversation. Let's listen to this.
Maria, 45% of filers during this tax season availed themselves of at least one of those programs. So we had record refunds, and because of the modernization at the IRS, if you filed electronically, we were able to get your refund out in 21 days. So the consumer's very strong. Another aspect of the tax bill is the permanence of full expensing. So companies are coming, whether it's equipment, factory structures, they are able to write that off in a year. So we're seeing a CapEx boom. The way a CapEx boom works is you have a construction boom that then morphs into factory jobs. So that's very strong. And again, the consumer's very strong. We're in constant touch with the banks and the credit card companies, and they're saying that all quintiles of the distribution group is very strong.
All right, Kevin, what's your reaction to that?
I think many analysts and economists remain surprised at how resilient the U.S. economy and the U.S. consumer has been. The U.S. consumer continues to spend. That's important because they account for 70% of the economic growth in our country. The economy still grew at 2% in Q1. Maybe it's slowing a little bit, but it's still growing. And unemployment at 4.3% is relatively close to full employment in this country. And even the Federal Reserve is forecasting unemployment to only nudge slightly higher to 4.4% by the end of this year. So I think the underlying foundation of the U.S. economy now is strong.
Yeah, and by the way, we're going to be getting, the JOLTS report, ADP, and of course Friday the jobs report. So all this data. Look, when initial claims move a market like it did last week, you know the jobs are important.
It's a big deal
to investors, and it really is. Kevin, it's great to see you.
Thank you, Cheryl.
Kevin Mon, Mark's going to stay with us. We're going to take a quick break. We'll be right back.